What's up, everybody? It's your boy Sad coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today, we're doing something a little different. Instead of analyzing whether a stock is a buy, we're learning one of the most useful indicators for beginner and intermediate investors: Bollinger Bands. To make it easy to understand, we're using a stock that just experienced a massive move, Zscaler, ticker symbol ZS. If you've ever opened a chart and seen those bands wrapped around the stock price but had no idea what they meant, by the end of this video, you'll know exactly how they work and how traders use them to identify momentum, volatility, and potential reversal points. Let's jump in. Bollinger Bands consist of 3 lines. The middle line is usually a 20-day moving average. The upper band sits above that average, and the lower band sits below it. Together, they create a range that helps traders understand how far a stock has moved from its normal trading behavior. Think of the bands as guardrails. When price moves toward the upper band, momentum is increasing. When price moves toward the lower band, selling pressure is increasing. The farther price gets from the middle band, the more stretched the stock becomes. Now let's look at Zscaler. Before earnings, ZS was trading near the upper Bollinger Band. That's usually a sign of bullish momentum. Buyers were in control, the stock was climbing, and technical indicators were generally supportive of the move. Then earnings arrived. The company actually reported strong results and beat earnings expectations. Normally, that would be enough to send a stock higher. But management issued cautious guidance for the upcoming quarter, and investors focused on that instead of the earnings beat. The result was a massive sell-off, and this is where Bollinger Bands become incredibly valuable. Notice how quickly price moved from the upper band toward the lower band. That's a sign that volatility exploded. The stock wasn't simply declining, it was moving far away from its average price in a very short period of time. When traders see price rapidly approaching or moving outside a Bollinger Band, it tells them the stock may be becoming overextended. Now here's the important part. A touch of the lower band does not automatically mean buy. A touch of the upper band does not automatically mean sell. That's one of the biggest misconceptions about Bollinger Bands. Strong stocks can ride the upper band for weeks. Weak stocks can ride the lower band for weeks. The bands are not buy and sell signals. They're context. What they help us identify is whether a stock is behaving normally or becoming stretched. After the earnings sell-off, ZS became stretched to the downside. Eventually, the panic selling slowed, buyers stepped back in, and the stock began moving back toward the middle Bollinger Band. This is called mean reversion. Mean reversion is the idea that price tends to move back toward its average after going too far in either direction. It doesn't happen every time, but it happens often enough that traders pay close attention to it. Now let's make Bollinger Bands even more powerful. Never use them by themselves. Instead, combine them with RSI and MACD. RSI measures momentum and helps identify overbought or oversold conditions. If a stock touches the lower Bollinger Band while RSI is extremely oversold, that may strengthen the case for a bounce. MACD helps measure trend momentum. If price reaches a Bollinger Band while MACD begins reversing, that can provide additional confirmation that momentum is changing. When multiple indicators start telling the same story, confidence increases. Looking at ZS, we can see how Bollinger Bands helped explain the entire move. The stock showed strong momentum near the upper band before earnings. Volatility expanded dramatically during the sell-off. Then, price began reverting toward its average once panic selling eased. That's why Bollinger Bands remain one of my favorite indicators for newer investors. They won't predict the future. No indicator can do that. What they can do is help you understand when a stock is moving normally, when momentum is accelerating, and when price may be becoming stretched away from its average. And that's valuable information whether you're trading for the short term or investing for the long term. So the next time you pull up a chart, add Bollinger Bands and start watching how stocks interact with those upper and lower guardrails. You'll be surprised how much insight they provide. Remember, I'm not a financial advisor, and this is not financial advice. I'm just a guy who loves stocks and helping people win at this stock game. Do your own research, manage your own risk, and never invest money you can't afford to lose. If you enjoyed today's video, make sure you smash that like button, subscribe to the channel, and drop a comment below of some stocks you'd like to see. This is Sat from Stocks by Sat 06, and I'll catch y'all in the next one.